We're heading into the final quarter of 2020, and what a year it's been. The longest bull market in history came to an end earlier this year as the pandemic gripped the globe. Without further ado, I'd like to introduce you to Jim Rogers of Rogers Holding. Jim, it's great to have you here today.
I'm delighted to be here, Remy. I'm a fan, so let's go.
Well, first and foremost, since the last time we spoke, the world has changed, and that means the investment outlook has obviously changed as well. So, what do you make of what we've seen so far?
Well, we had the longest bull market in American history, and it may be still going on depending on how you measure it. If that mess in the spring is seen as just a correction, then we're still in the bull market, and we're making all-time highs or nearly all-time highs. So we're well overdue for problems in the American stock market. But in Washington, they're printing and spending and borrowing and spending and printing some more. So the markets are loving it so far. I'm afraid it's all going to end very, very badly when it ends, Remy. But at the moment, hallelujah.
And Jim, Albert and I are here in the United States on the East Coast and the West Coast, but you're over in Singapore, so you have a different perspective than we do. Tell us your view of what's happening and what they're saying on your side of the world.
Well, since I am in Asia, I would just continue the theme a little bit. Every day the head of the Bank of Japan goes to work. He goes early because he's Japanese. He cranks up the printing press and he prints as much money as he can. And he said he's going to print unlimited amounts of money. And he's buying stocks and he's buying currencies. He's buying ETFs. I mean, that guy is nuts. He has a lot more money than I do. So I bought some Japanese ETFs too. Because as long as he's going to buy them, I'm going to buy them. But if you look at Korea, well, let's go to China. China's bigger. The Chinese market has done very well this year, partly because it's down. It's down nearly 40 or 50% from its all-time high. But the Chinese market has done very well this year too. So some markets around the world are doing very well. Most Asians, at least if you read the internet or read the press, most Asians are very skeptical about Mr. Trump and what's happening in the U.S. They're quite worried about where he might lead things. I am too, by the way. I'm worried about what might happen as well. But at the moment, happy days are here again. Everybody's printing a lot of money. We're all worried about, at least I'm more worried about how it's going to end, but most investors love it. If you're a Japanese stockbroker, you think you died and gone to heaven. That guy just buys. And it's great for the market.
And Albert, it's been a while since you've had the opportunity to speak to Jim. So do you want to ask him anything right now?
Absolutely. Remy, I could talk to Jim all day long. But let me start with a question about gold and commodities. Gold has had a great year. Some people think commodities are going to fall on the back of that. There was a report last week that mentioned that companies with exposure to commodities should do well during the next cycle with all this money coming in. What I want to ask you, Jim, is I feel it's too broad to lump all commodities into one basket because they're so varying. I mean, the gold trade, by comparison, seems relatively simple. I can explain that to someone in terms of the US dollar and inflation. But in commodities, whether it's your basket or someone else's basket, you have oil combined with copper, combined with agriculture. There's so many factors that influence all those commodities. Are there specific commodities that you like now and specific ones that you do not like?
Well, I own some gold and some silver. At the moment, I'm not buying either because, there are a lot of people being forced to sell their gold and silver to buy food, to buy anything, especially in Asia. In India, a lot of people are having to sell their gold and silver. But I'm going to buy more. I'm waiting to buy more. Don't think I'm not. So certainly gold and silver, especially silver. Silver is down over 50% from its all-time high. Gold is near its all-time high. So of the two, I would prefer silver at the moment, but I will be buying more of both. But you're exactly right, Albert, about commodities. It's a little bit like stocks, the American stock market is making near all-time highs, but many stocks are actually down this year. So it is a market of stocks. It's not a stock market, and likewise commodities. You can't just say, oh, buy commodities, because the difference in sugar and copper is enormous. They don't even know each other. They don't know that they're both commodities and don't care, because the factors affecting sugar and copper, et cetera, are very, very different. But as I look around the world at the moment, bonds are certainly in a bubble. Bonds are certainly not cheap. Stocks, we've just discussed stocks, American stocks anyway, and some other markets around the world. Commodities seem to be the cheapest asset class. Gold's made all-time highs, but everything else seems to be the cheapest asset class there is. But again, Albert, you have to be careful. You can't just say buy commodities. You can. I mean, you can buy indexes, but it's better to buy the individuals if you want to make a lot of money.
When it comes to U.S. fixed income and U.S. equities, the theme seems to be co-invest with the Fed. When it comes to Japanese ETFs, as you mentioned, it seems to be buy what the Bank of Japan is buying. When it comes to things like soybeans and corn, is it buy what the Chinese government is going to buy? And if so, how would you know whether they're going to follow through on their promises?
Doesn't Sprott know? Sprott knew everything. Upward. What's happened?
That's gold. That's great. That clip will go a long way for us. Thank you very much. But seriously, there's so many considerations when it comes to those commodities because they're exported, strength of the dollar, because we have these trade entanglements with China. It's whether or not they're going to follow through. How do you evaluate something like that?
Well, and there's weather too. You forgot about weather, which sometimes.
Oh, farming. Correct. Yeah, that's right.
That's one of the things that makes this such a fun game, but also such a difficult game, because it is hard. And the fact that if China buys a lot of anything, it has a major effect. So that is something that we need to know. How do you find out? I don't know. I wish I knew. If Sprott doesn't know, I certainly don't know.
Jim, let's touch on energy before moving on. It's been a tough year, obviously, for energy. Not only are you talking about global demand, but you also have cartel action and then an unprecedented shutdown. It's been tough times, but at the same time, aren't these the times when fortunes are made? People who know how to act during these times?
You're exactly right. I hope your parents taught you to buy low and sell high. It's very easy to do. The hard part is what's low, and what's high. We all know to buy low and sell high. We all know that energy right now has been devastated. I mean, it's down 70% from its all-time high, whatever the numbers are. So yes, I'm sure there are going to be huge fortunes made in energy now. As we speak, I am not buying energy, but it's something that, who knows, maybe tomorrow I will be, because it's certainly down a lot from its all-time high. And we are going to drive to work again. We are going to fly to London again. We're not going to take boats to London. We are going to use more and more energy before this is over.
I've got another question on life in Asia, but before that, I think Remy had a follow-up question on the gold trade, Jim.
So earlier this year, we saw the precious metal break above the $2,000 barrier, and right now it is below that. But given all of the volatility that we've seen so far and all of the uncertainty out there in the long term, do you expect that you'll continue to be holding on to your gold and handing it down to your daughters?
Well, that's my plan, Remy. I hope that happens, because everyone should own some gold, just as an insurance policy, if nothing else. The risk at the moment is the gold actually might turn into a bubble before this is over, because things are getting very bad, and many governments are setting us up for a horrible problem. And if we have a horrible problem, gold and silver might well turn into a bubble. Unfortunately, you always have to sell bubbles, because bubbles, when they pop, they go down gigantic percentages, and they stay down a long, long, long time. My plan is that gold is going to get overpriced. It's going to go up a lot before this is over. Gold and silver going to go up a lot before this is over, and I hope I don't have to sell. But if they turn into a bubble, I will have to sell. Again, Remy, just ask Sprott. They know what's going to happen. You're wasting your time talking to me.
Jim, do you have any quantitative thresholds that would tell you that gold is in a bubble? I mean, we're under $2,000 now. What level would you start to think about maybe selling?
Well, Remy, I mean, it's really Albert. It's really the market that tells you whether that number is 8,000 or 18,000. I don't know. It depends on how we get there and what's happening. If America and Iran go to war, I'll be begging to buy at 8,000. We all will be. It just depends on how we get there and what. Bubbles always look the same everywhere in the world, and no matter what the asset class is. I hope that I will be smart enough to recognize the signs that we're in a bubble if we get there. My hope is that gold just goes up a whole lot. It will go up a whole lot in the next turmoil that's coming, but I hope it doesn't go so far as to be a bubble.
Would it be correct to say that the incredible surge in asset prices we've seen is really just the inverse of a dollar bubble deflating?
Well, that's partly true. That's always true because you do have the currency no matter what it is. But the dollar's not down that. I mean, the dollar's down. The dollar's had a correction, but down now 6-7% from its highs this year. I mean, that's significant in the currency market, but it's not as though the currency is down 40% or 50% or something. Yes, that is always a factor in commodities, especially gold and silver, but real assets, you have to consider the currency. And the dollar has been correcting. By the way, I own a lot of US dollars. It's a terribly flawed currency. I mean, the US is the largest debtor nation in the history of the world, Albert, as you know. So you're probably going to say, well, why do you own dollars? I own it because when the turmoil comes, people look for a safe haven. People think the dollar is a safe haven for historic reasons. It's not, but people think it is. And as you look around, they're not going to buy the euro. They're not going to buy sterling, pound sterling. I mean, just most currencies have their own problem. So I own dollars. I certainly see the correction. Corrections are normal. Corrections are usually good for markets, especially bull markets. So I own dollars. And the dollar is going to go higher before this is over. It is certainly a factor when you think about any hard asset, especially commodities.
Jim, I got a question for you about something else. I've been a fan of your travels for quite some time, and the first time I had the opportunity to speak with you, you had fairly recently moved to Singapore, mostly for the benefit of your daughters. I hope that at this point or sometime in the future, they realize and appreciate what you've done for them in terms of opportunity. But now that you've been there for a while, and China has gone through this maturing process, we've seen the good and the bad. And by the bad, I'm talking about some of what we're seeing in Hong Kong, a difference in philosophy, let's call it, with regards to personal freedom. I'm wondering, in a hypothetical comparison, who would have more opportunity? A baby Jim Rogers in rural Alabama in 1940, sorry, sir, or your equivalent.
I wasn't born in 1940. I wasn't here then.
1940s, or a Chinese equivalent of you, equally intelligent, equally ambitious, born in 2020 in the Chinese equivalent of Demopolis, Alabama. Who would have more opportunity?
Well, it's a tough comparison because being in America in the 40s, you were on the verge of a great boom. America became the most powerful and richest country in the world after the Second World War. We weren't before, but we certainly became that. So America was a fantastic place to be. But America in 2020, is America a fantastic place to be for a young person? It's not a good place for an old person. Look at all the debt that's being built up in America. No, my children, who are 12 and 17, are going to inherit staggering amounts of debt. So I don't see how it's great to be a young person going forward now, because someday, 5 years, 15 years, I'm going to say, where'd all this debt come from? What do we do about all this debt? The same thing happened to the British, 80, 90 years ago, and they had been the richest, most powerful country in the world. So if you're looking at 2020 at a young person, I would suspect a young person in 2020 probably has a better long-term opportunity in Asia, especially China, than in the US. The Chinese have debt now, but nothing like in America. Japan has staggering amounts of debt. America have staggering amounts of debt, but most Asian countries still don't have much debt. They're still basically creditor nations. China's still a creditor nation. America's the largest debtor nation in the history of the world.
Jim, you answered the question the easy way, but what if we add that temporal component and we're comparing 1940s America with 2020 China? As you mentioned, America went through a very booming period. Do you think China has that type of boom ahead of them?
Yes. In my view, the 21st century is going to be the century of China. They're already the second largest economy in the world. They don't have staggering amounts of debt. They have a very, very high savings rate. And as you know, if you want to build an economy and a society, you have to have savings and investment. I mean, even Karl Marx knew that you had to have capital. The name of his book was Das Kapital. You've got to have capital. I mean, he got the rest of it wrong, but he was a good enough economist to know you have to have capital. The Chinese right now and in the rest of this century, as far as I can see, have huge amounts of capital, have huge savings, and don't have staggering debt like we do in the United States. So it was fabulous to be born in America in the 40s. It's probably fabulous to be born in China in the 20s.
Thank you for that, Jim. Remy?
Well, Jim, it's always fascinating to hear your perspective as well as to get your opinions. And obviously, you've lived through many market cycles. So where do you think long-term value investors should be looking right now?
Well, as I said, the American stock market is making all-time highs. Some parts of the American market are in a bubble now. Apple and those stocks never go down. Doesn't mean it's coming to an end. Bubbles can usually go on longer than anybody expects and do crazy things. And looks like that's what's happening in the U.S. market now. Other parts of the American market are very, very cheap. Now, some stocks are down. Some stocks are actually down this year, Remy. Despite the market, the average is making all-time highs. So as I look around the world, I try to find things that are not making all-time highs. I bought some Chinese shares recently. I bought a Russian shipping company recently. I told you about Japanese ETFs. I may buy more. I'm looking for things that are down still because I don't see yet that the big market is coming to an end. Now, again, I want to remind you, my market timing is horrible. So don't use me for market timing. But I don't see I see the very strong possibility that we're going to have a blow off, the one last period where the market really goes crazy, and then it'll all be over, and the U.S. will lead that. But I'd rather buy Japan, which is down 40% from its all-time, 45% from its all-time high. And he's buying ETFs every day. Or China, which is down 40 or 45%, and where the economy's doing much less badly, it's doing better than most of the world. So I'd rather see opportunities in places like that. Or Russia. Russia's hated. I like buying places that are hated.
And Jim, earlier when we were touching on energy in the commodities section, you said that you would wait to get back into energy. So what would it take for you to look at the sector again?
Who knows? Who knows? I'm lazy. I see the prices. I see the prices every day. I don't know what's going to make me buy energy again, but I do know as I look around the world asset classes, energy certainly and agriculture certainly among the cheapest there are.
And Albert, would you like to ask Jim any more questions today?
Well, let me ask Albert. You tell me, Remy. You tell me when I should buy energy.
Well, I guess that would depend on your risk tolerance and investment horizon.
Well, if you can do that, I mean, probably anybody buying energy today is probably going to be okay 5 years from now, 10 years from now. If you have to worry about committees or somebody asking you why is it down, then no, I'm not sure. I'm not buying it right now, but probably on any kind of long-term horizon, energy bought today is probably going to be great. I'm not buying it today, but I'm sure that 5 years from now, 10 years from now, anybody who bought energy today is going to look very smart.
Jim, yeah, just one question as we close here. Getting back to the personal life decisions, you brought your family to Singapore. I'm wondering if your daughters, as they get older, have they expressed any interest in spending some time in the United States? Daddy made a big name for himself over here. The country has been good to a lot of people. I found opportunity here. You absolutely did. I'm wondering if there's been some curiosity or some interest in them coming back, at least to study or to live for some time.
Extremely insightful question, Albert. My daughter, who's 17, will be going to university next year. I thought she would go to Oxford. She has no interest, even though it's named to be the best university in the world. She says, "You deprived me of my American heritage. I'm going to go to university in the United States. I want to learn more about America. You did a terrible thing. You took me away from America." Now, I know and you know that some days you'll look back and say, gosh, he must have been smart, teaching me Chinese and teaching me about Asia. And now she's insisting she's going to go back, go to an American university and be American. Which is great, which is fine. I'm all for it. I thought she knew a lot more about America than she thinks she does, visit their American relatives, etc. But she's now determined to go and be 100% American for a while.
Yeah, I know a little bit about you. I know a little bit about kids, and I know a little bit about fate and how things work out. So it's not surprising at all. And I think she's set up wonderfully for that experience, and I think it'll be great for her.
Well, I hope so. You can ask me in 20 years. We'll know.
Can I put it in the calendar? I'd love to.
Put it down. We'll all meet. Remy, you call us in 20 years.
Thank you so much, Jim.
Yeah, Jim, I just wanted to add to that. I am originally from Japan, but I went to school in the US and then went back to school in Japan and then the university in the US. And while I didn't appreciate being moved from city to city in my childhood, I can now appreciate the experience of having lived in both the Western and Eastern world and appreciate having the language skills as well. So I'm sure your daughters will feel the same when they get older.
Well, when she's 17, she doesn't quite feel that way, the way you do and I do. But as I say, see you in 20 years. You speak Japanese, Remy?
I do indeed.
You must be fluent.
I am fluent.
Oh, wow. Smart woman. Smart woman. Chinese would have been better, but still.
Well, I guess the good thing is that the Japanese kanji characters are the same as simplified Chinese. So if I'm looking at a Chinese newspaper website, I can sort of make out what they're talking about.
Yeah, well, the Japanese got their language from China, as you know.
Yes.
Yeah, the written word is the same. It's interesting. I just want to tell you a story about that because the Chinese have a word, wei ji, which means that opportunity and disaster are the same thing. And the Asians have been around a lot. We don't have that word in English, but they've been around a lot longer. So opportunity and disaster are the same thing. It's interesting. The Koreans also have that word, and it's the exact same character as the Chinese character, pronounced differently. And the Japanese, kiki, the Japanese, you correct me if I'm wrong, but the Japanese word is kiki, and it too is the exact same character as the Chinese character for wei ji, and they all mean opportunity and disaster are the same thing, and they are. So whenever you see a disaster, start thinking about the opportunity.
Well, I think that might be a good way to approach investments as well, Jim.
Definitely. That's why I bring it up.
Well, Jim, we really appreciate you joining us all the way from Singapore today, and thank you so much for all of your insights.